Good evening and welcome to the Jash Engineering Q1 FY23 earnings conference call. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risks that could cause future result performance or achievements to differ significantly from what it is expressed or implied by such forward-looking statements. Please note that we have mailed the results and the same are available on the company's website. In case if you are not received the same, you can write to us and we will be happy to send the same over to you. To ask questions, please select the raise hand option. We will call out your name and then request you to unmute yourself and ask the question. Please note the question on a chat box will not be monitored on an active basis. To take us through the results and answer your questions today, we have the top management of Jash Engineering Limited represented by Mr. Pratik Patel, Chairman and Managing Director, and Mr. Dharmendra Jain, Chief Financial Officer. We will start the call with a brief overview of the quarter, forecast, and then conduct Q&A session. With that said, I will now hand over the call to Mr. Pratik Patel. Over to you, sir.
Good afternoon, everyone. I would like to start the presentation in a way that those who are new to the company would have some idea of what we are doing, and then I will go on to the financial results. As you are all aware, we are a manufacturing company making equipment for water, wastewater treatment plant, pumping station, conveyance, etc. We have various subsidiaries in the group, and our consolidated sales last year was 374 crores to our 5 manufacturing units which are worldwide. Next. The company has evolved over a period of time by acquisitions and technical collaborations. And today we have brand strength which can help us introduce our product throughout the world. Next. The 4 major acquisitions of the company were Shiosid, Shivpal, Mar Machine & Bow, and Rodney Hunt. And Rodney Hunt was the last acquisition, and with these 4 acquisitions we have enhanced our product range as well as branding in the international market. We have set up 5 manufacturing units, 4 are in India and 1 is in America, and with some minor investment which we plan to do in next 2 years, we will reach a turnover potential of 500 crore from these units. We have one of the best plant capabilities in our industry worldwide, with investment in most of the things which are required to produce all the products in-house. We are big time into water control gates and heavy fabricated gates. The range of heavy fabricated gates have come from acquisition of Rodney Hunt. This lot of noise is coming. We have also a very big range of core-steering equipment. These core-steering equipments are either by Jash itself or through our technical collaborations and also through acquisition of Mar Machine & Bow in Austria. Next. We also manufacture a big range of valves which are used for bulk solid handling as well as in water conveyance lines. And we also make process equipment which are required for treatment of water as well as for pumping of water. We also make equipment for generation of power using renewable energy and for filtration of wastewater to give a very good quality of output. Most of our equipments are used in a wide range of applications such as water intake systems, stormwater pumping, water and wastewater treatment, irrigation systems, and in industry such as power plant, paper and pulp, petrochemical, steel, chemical, and all process industries. Our revenue contribution, our various products contribute to our total revenue. Water control
Kind request, if everyone can put their lines on mute, it will really help. I see so many of you with the line still on. I'm just. I see Ramesh who's still on.
So water control gates is one of Water control gate is one of the biggest contributor to our revenue. Nearly 50% of our revenue comes from that. Balance comes from screening equipment, valves and hydropower and pumping and process equipments. We are trying to broad base our market in the export. Already major portion of our revenue is coming from export and we expect it to increase in the years to come. These are some of the clients and consultants who are key to Jash business in India and next out of India. Coming to financial performance, the three principal companies in the group are Jash Engineering, Shivpal and Jash USA. These are the three main production oriented companies. In case of Jash Engineering, we have had a minor growth in turnover and minor improvement in EBITDA in the first quarter. In case of Shivpal, there has been a decline in revenue because a lot of material which was lying ready could not be built on account of problems at site or on account of financial situation of our client. As a result of that, their EBITDA has gone down compared to last year. Similarly, in case of Rodney Hunt, the revenue has gone down because of issues related to berthing of ships. So material sent from India could not get berthed in America because of port congestion. And this has resulted into significant reduction in revenue of Rodney Hunt. However, the drop in EBITDA is not as significant because now things are well under control in America for our company. I would like to add here that first quarter, whoever is aware about the company knows that the first quarter is always quite bad in our type of industry. It is after the third quarter, from the third quarter that everything starts picking up. So looking to that, I would be not too much concerned about what is portrayed over here on the first quarter results. We expect significant improvement in second quarter in all the three companies. Next. So our consolidated revenue has grown little bit, as a percentage only 2%. There has been a small improvement in gross profit also, as well as in EBITDA margin. However, profit before tax and after tax both are in the negative because of not enough growth in the revenues. In comparison to quarter 1 of 22 and quarter 1 of 23, we observe that there has been some slight improvement in certain aspect and some slight deterioration in certain aspect. However, the results of Q1 are quite narrow to have a very good comparison. I believe that after Q2, a better comparison can be formed. Our consolidated order book position is at an all-time high. The combined order book is at 586 crores, out of which the projects outside India are 435 crore and within India is 151 crore. Shivpath as well as Rodney has a very healthy order book position. With Jash USA oblique Rodney, our order book position also is an all-time high of 229 crore. Next. Our pipeline is also quite strong. We already have negotiated orders of 69 crores as on 1st of August, out of which 59 crores are projects in India and 10 crore projects are outside India. We are already having good future pipeline also. We have under negotiations order for 58 crore, which we expect to finalize within this month. And as our strike ratio is quite high, sometimes it is as high as 80-90%, we expect this type of order inflow to continue. We still maintain the same projections for consolidated revenue. I had informed in the last presentation that we are looking for 430 crores combined revenue with 200 crore from India and 230 crore from outside India, and we are still maintaining the same. Some of the major developments I would like to highlight here is our order book position in Rodney has significantly improved. Today we have orders in hand which is more than $30 million. It should be noted here that we are projecting $23 to $23.5 million as our revenue for the current year. So our order book is already more than what we have projected for this year, and still 7 months have to go. One of the big problem we had in America was non-bonding facility. We could not bond for orders. Now we have, after the improvement in the financial results of Jash, someone in America has agreed to give to us bonding at a cost. And this will greatly help the company in getting new orders where bonding is required. On the new products, we have last year introduced this filter in the Indian market. We have got orders for 2 more disc filter machines, and for 1 machine we have got letter of intent. We expect that by end of this financial year, we will have at least references of 6 machines in India. Now, one of the problems with the disc filter machines is this is German technology, completely made of stainless steel, one of the top quality machines available in the world, but it is very expensive. And until we do not make this machine completely in India with lot of indigenization, we would not be able to sell these machines in high quantity. We expect the machine, I think 50% already is indigenized. Another 15 to 20% will be able to indigenize by November, December. And the final indigenization level up to 95% would be done by March of this year. And once we achieve this, it would ensure that we can help sell the machines in higher volumes as well as better profits. We have a policy of developing or adding at least 2 new products to our basket every year. In line with that policy, we had taken up development of vortex type grid classifier and combined spinning and degritting unit. for the year. This will be doing in association with the European company. However, we had already started marketing of these products for last 4-5 months back, and I am glad to inform that for these new products which we aim to develop now, we have already got orders within this month. On the expansion front, we will start work on Unit 2 this month or next month, and this will entail an investment of 13 crore. And the new facilities, including in Unit 2 as well as capacity additions in other units, will be completed by end of next calendar year. At Shivpad also, we have already invested on 2 acres of land, and we will start the construction of that plant in Chennai by November, December of this year. And this plant also will be ready within 1 to 1.25 years from the start date. This will call for an investment of around 10 crore. But once this is done, Shivpad would be in a position to scale up that turnover from present 25 crores to 50 crores in 3 to 4 years time. Overall, I would like to say that overall results are not what you may expect. However, our Q1 is, as I said, already if you see over the years, the results are always subdued in the first quarter. In the second quarter, we are looking for quite a good improvement, but it is the third and fourth quarter will bring in maximum contribution to our revenue. Last year, fourth quarter brought close to 47% of the total turnover. And that should give you an idea of how lopsided our quarterly results could be. We believe that the modest growth in standalone revenue of Jash Engineering is quite normal. However, the dispatches from the subsidiary companies have been quite below par. However, we have seen the movement already, and we are quite confident that by end of Q2, the revenue as well as improvement in profitability will be seen. I would especially like to point out that in Q1, our profitability on standalone basis is marginally improving. And this means that the cost of raw materials is coming under control. As the revenue is expected to grow at a sustained pace, we are quite confident of improving revenue as well as profitability in this year. Our projections for revenue as well as profitability has remained the same we made before. Thank you. I would like to now answer any questions which you have.
Thank you, sir. We will now begin with the Q&A session. The first question is from Mr. Naveen. Please unmute yourself and go ahead.
Thank you. Thank you for the opportunity, sir. This is regarding Rodney Hunt. We had a bonding facility of approximately 1.5 million, if I got it right. With the recent tie-up, what will it increase to? And what kind of orders require bonding facility?
So why, first of all, let me explain why bonding facility. What happens is the industry in America knows we were not in a position to offer a bond. Bond is, suppose your company is not doing good financially. Then your competitor will go and say that this company will close down anytime. So if you don't take a bond from this company, your project would be in a mess. And they will egg on our clients to ask for bond because they can give the bond. In such cases, the client will ask us to give 100% bonding. So if the order is of $4 million, they may ask us to give a $4 million bond, which is for ensuring that the order is executed. If the order is not executed, they can encash the bond. Now, this could depend on client to client. So some client having only 500,000 order may also ask for bond, and some for $5 million he may ask for bond. But generally it is for higher value. Clients are nervous when they see routine financials, and that is why they will ask for bond. The $1.5 million which you are telling about is still not, the bank has sanctioned, but all the approvals have not come through. So meanwhile, we have also talked to someone, one of the partners of our German collaborator. We have asked him to give surety for the bond, and he has agreed. So he will charge us a cost. The cost is generally within 1% of the bond value. And at that cost, he is willing to give his surety, which will enable the banks to open additional bond.
Yeah, social security number of USA.
And
initially we started for 4 to 5 million. Later on
we can go up also. So up to $5 million we are willing to stand the bond. So 5 plus 1.5, that is around 6.5 million. If a big order is there and if someone is asking for bond, now we can do it.
So my second question was regarding Rodney Hunt. Last year, what was our on-time delivery? And why, if there were any delays, why it was?
See, Rodney Hunt, I would say the on-time delivery was less than 50%. It was not good. We have significantly improved upon that. In this year, from Orange, on an average, the delivery of 75 to 80% is on time. Only very few are not in time, and the reason for that today is logistic. Material sent from India does not reach in time in America because of limitation in shipping or port congestion. So on-time delivery is a result of many things. Also supplying of components from India or anywhere else in the world to Rodney Hunt, and the integration of that component and then selling of the product to the client. However, the on-time delivery from Rodney Hunt has significantly improved now. One of the reasons for that also is that we have tried not to take too many orders in Rodney Hunt which are complex in nature. So now that our order book position is quite strong, we can control the type of orders which we have to take for execution in America.
Got it, sir. I have a few more questions. I'll get back in the queue. Thank you, sir.
Yeah, thank you.
Thank you, Naveen. The next question is from Ashish Rampuria. Please unmute yourself and go ahead.
Thanks, Adesh. Prateekji, couple of questions. For Mumbai STP, I think there was something that some South Korean company has got a new technology and the cost of the entire STP went down, right? What is the update there, and is there any implication for our business?
There is no implication. That company has been approved. Their technology has been approved and they are going ahead with it. So now all the 7 projects are awarded and we have started getting inquiries also.
Okay. Now for the South Korean company, also can we supply our products, or our products are going to those 6 odd projects?
No, we can supply the products. And we, as a technician, I can go in detail, but simple explanation would be the size of the project which this South Korean company and Jindal Water is going to do is very small compared to all other projects, balance 6 projects. And this technology was found suitable to that size of the project. It is not as if the same technology can be used for 3 or 4 times scaled up project. So that technology was found suitable and MCGM is going ahead with that.
And our products can go across all the 7.
Yes. Products are general to the technology.
Excellent, right? My second question is this Unit 2 expansion and the incremental capex per Shipad. What will be your capacity broadly in terms of rupees crores once these expansions happen?
Ashwinji, if you understand our business, you see our maximum revenue comes in quarter 4 and quarter 3.
I know.
Okay. Now, how is it possible? How can some company do 45% of its revenue in the last quarter? It is only possible if you have large spaces under crane available to manufacture and stock the material.
True.
Right? So when we build up capex, it is sometimes also we are building up plants so that we have more area to produce and stock when clients are not lifting it.
Okay.
So it is not always machinery, but sometimes it could also be plants with crane facility, so that you can manufacture, assemble and stock the products. So these capex, in case of Shipad is completely different. In case of Unit 2, it is more of, we already had a plant which is being shifted parallel to the road because we are falling short of carbon steel production. Overall, I would say with these 2 capex, one at Shipad and one at Unit 2, we should be in a position to touch 500 crore in time to come. However, in case of Shipad had no manufacturing facility before. So this is completely new manufacturing facility being set up for Shipad so that they can scale up their operations. Today they are dependent on vendors, but on vendor basis you cannot grow the company to a big size, and that is why that investment is being done.
This 500 is for the standalone. What we are targeting this year is 300 crore for the standalone.
Okay, and the USA is separate.
Yeah.
And given the fact that we all have a very strong, I think we saw what in July, we saw what you, anyways on the slide also you highlighted that, already 69 crores of order by large negotiated. So given the strong order book, I wanted to understand the capacity, but I got a sense. Thank you.
So with the strong order book also some projects are meant for extended delivery.
Yeah.
So even if I make, they are not going to take within this year. So,
yeah, understood. And that's why 430 is coming this year and rest I think will spill over next year.
Yeah.
Okay, thank you.
Though we will be trying more than 430, if you remember last year we had said 330, 340 and we did 365, 370.
Correct.
So if client is willing to take delivery, I can manufacture. My problem is not my capacity, my problem is willingness of the client to take delivery.
Correct. I'm aware, we have discussed that.
If his project is going late, he will not take delivery.
I agree. Yeah, fair point. Sure. Thank you.
Thank you, Ashish. The next question is from Sanjay Kumar. Please unmute yourself and go ahead.
Hi, thanks for the opportunity. I don't know if this has been asked before. I'll just ask now. So on the BMC, so they gave out 28,000 crores of orders for the 7 STPs. What would be the size of our products in that 28,000 crores? Just to get a sense of the potential.
See, based on the inquiries which have been started coming, I would say between 300 to 400 crore.
Okay, and I was going through the slides. We do have NCC, L&T, we sell to Suez and SPML also. So there are 2-3 other EPC guys like
everyone, we are selling to everyone. All the 7 contractors who have got the job, we are working with them already.
Okay, and all put together is 300 crores out of 28,000 crores.
It could be 300 to 400 crore, I said.
Okay, sir. And And last year we introduced disk filters, and now we are talking about classifiers, grid classifiers, degritting units, so on. So are there any more product gaps in the entire value chain of our products in our industry, or are we all covered in every aspect?
No, we are not covered in every aspect. If you see the water industry as such, so the first stage is always compounding of water. It's a dam. In the context of Bombay, I can say you have Vetanna Dam and various dams, 5-6 dams. So you collect the water, then you pump the water, then you have pipelines coming 60, 80, 100 kilometers far away to Bombay bringing water. So in the pipelines, we are only doing specialized valve, which is for water hammer control. But we are not having control valves in the pipeline. So that complete segment, and which is a very big segment, it's the annualized basis, I can say that is a 1,500 crore valve business. We are missing on that. Then the water comes to the treatment plant, where it is treated. We have all the equipment and gates and valves for treatment. Then after treatment, the water goes to your homes. And that is for distribution. We do not have valves for distribution. These are special control valves, which many companies are in the business in India, and but we are not into it. Once the water reaches your home, then it is converted into wastewater, where again there is wastewater pumping station, where we have all the equipment, wastewater treatment plant, we have most of the equipments, and depending upon the type of the process, primary treatment, secondary treatment, tertiary treatment, various equipments are required. We have most of the equipment up to secondary treatment.
Okay, sir. Thank you. Thanks for that explanation. Finally, on margins, so 430 crores, and what kind of margins are we looking at?
I would say the huge increase in cost of raw materials and the uncertainty related to that has tapered down now. So things, though not comfortable, but are still under control now. And as a result of that, I would say that positively we are looking at 10% PAT. And if we get further improvement in raw material cost, improvement on the downside, then I am looking at 11% PAT. If along with reduction in raw material rates, if I am able to cross the projected turnover of 430 crore significantly, say I do 450 or 460, in that case, we could look for 1% more improvement in PAT.
Great, sir. Thank you. That's it from my side.
Thank you. The next question is from Nitin Dharmawat. Please go ahead. Nitin, unmute yourself.
Yeah. Thank you for the opportunity. So, sir, going forward, you talked about the raw material prices. So, going forward, as we build up and deliver for Q3 and Q4, wherein maximum revenue comes, what do you see the impact since there is some softening in the prices? Will we have a better margin or margin going back to the previous level that we have seen?
So Nitin, 1 year back when this question was asked to me, I was expecting margins to go about 12 to 13%. PAT margins to go 12 to 13%. However, the big price rise subdued everything. And instead of improving, we are down to 9, 9.5 or 8, 8.5, 9% PAT levels. Okay. Now, if the price remains subdued, then, as I said, I am expecting between 10 to 11% PAT margins. If the turnover goes up, if the clients are able to take deliveries and turnover goes from 430 crore to say 450 or 460 crore, which is possible because we have got orders in hand. In that case, again, we will see improvement in margins by a percentage or so. So I would say, depending upon turnover and nothing going wrong now, Oil is again started coming down. Raw materials have started coming down. Only shipping is a cause of concern because the shipment is still very erratic. So if all these things are under control, anywhere between 10 to 12%, I am looking for in this year.
Got it. And any other major capex that you are planning other than the Shivpad that you talked about?
No, Shivpad and Unit 2 is capex which is planned, which has to be executed in next 1.5 years. Other than that is only acquisition.
Okay. Okay, all the best.
Thank you.
Thank you.
Thank you. Next question is from Dilip Shahu. Please go ahead.
Mr. Pratik, my question is non-quarter related. It's, in last 4 years, we have grown from 200 odd crores to, let's say, 430, 450 crores this year. Our India business has kind of grown from 120 to 150. Our rest of the world business has gone maybe 60 to 80 or 90. Our US business has, of course, grown from 30 to 200, right? So that's a very uneven, growth. We have been doing extremely well in US and not so in others. So my question is, if you can just give a overall what is working for us in US and that is replicable, and what is not working for us in, say, a Europe or a India, and how do we bring in, because in terms of size of the market, of course, US is the largest, but the others are equally large potential markets. So that's question number one.
Can I go one by one so that I don't forget all the things?
Yeah, go ahead, please.
So let's talk about US first. When Rodney shut down in 2017, they were doing $33 million. Today, I am still talking about only $23 million this year. So to reach $33 million, I will still need 2-3 years. But Rodney was doing in 2008 close to $70 million. So the potential for growth in America is phenomenal. We should get our act right. And the act is to make the company first profitable, to get bonding facility, to get banking facilities. This looks easy, but we have no banking facility in America even today. So get one by one things in place, get the confidence of your buyers that we will not fold or collapse. And once that happens, I don't see any stoppage in America because we are seeing that as we are becoming stronger, our competitors are becoming weaker. They all thought Rodney is gone and they could survive. But now that Rodney has come back so strongly, many of my competitors have started wobbling. And I'm sure in time to come, one or two would close down. So Rodney is not something freak. It was there. We just are bringing it back. Coming to Europe, see, the problem with Europe is that we have many different languages. It's not easy to do business in every country of Europe. We do good business with French companies because we have a French-speaking employee based in France who looks after that business. So we do relatively good there. We do good in UK because UK is an English-speaking country and we have got a good partner in UK. So in Europe, the business is quite fragmented and also very difficult because of the language. In the rest of the world, we are doing, I would say, relatively good. In fact, we are growing quite fast in Singapore, in Hong Kong, in Thailand, in Malaysia, and so on. So I do not see, as well as growing very good in Middle East. So I would say the only soft spot has been India. But now India is also booming in our industry with the big projects coming up in Bombay, in Bangalore, in Chennai, in Delhi, even in Pune, and so on. I think we could witness a good phase of growth even in India.
Sure. Got it. Thank you.
Europe, you cannot compare with America. Europe will never be America.
Yeah. I got it. I mean, America is more homogeneous than Europe, you are saying.
Yeah.
Yeah. My second question was regarding this Mumbai deal. You are saying our addressable market is around 400 crores in a 25,000 crore tender that came out. So my concern or question is that since we are like 1 or 2% of the size of the project, is there a risk of somebody bigger coming and having a much complete product offering, underquoting us and taking our business, even though individually we know that there are very few competitors we have and we will be better. But once we get like somebody comes with a much more comprehensive range and much bigger offering, is there a risk that we might lose the deal to them?
So let me clarify on two aspects of your question. One is 26,000 crore. 26,000 crore includes 10 years O&M. So the project cost may not be 26,000 crore. It is inclusive of the operation and maintenance for 10 years. 26,000 crore. One. Two, no one on the world market today has the comprehensive product range which we have. The only product which we do not have is in the pipelines. But the Bombay project is not about pipelines. Bombay project is about treating of water which is already coming into Bombay. So the valves which we do not have for pipelines is not something great in the Bombay project.
Yeah, thanks.
Maybe
I got
if it was a water treatment and you are bringing water all the way from the dams, then those valves would have been a dominant business. But it is not so. At least in these 7 treatment plants, it is not so.
Sure. Okay. Yeah. So lastly, Mr. Prateek, this quarterly fluctuation, while, I've been with the company for like 4 years and I understand the rhythms and we have seen that every quarter happening, but somehow, it kind of, pushing everything to the last quarter, my request would be to figure out if some way we can smoothen out. I understand that the management has been doing this for 50 years, so you obviously know better. But, this kind of pushes everybody to the brink till the last quarter. So that's all I had to say.
Yeah, I also don't like it. You don't like it, I don't like it because it puts us great pressure in the last quarter. The problem is not about uncertainty. The order book position gives you a certainty. The question is about where to accommodate and how to finance all these things.
Yeah.
So, and that is a great cause of concern for us also. We hope that by increasing export, we would be able to balance it out. Unfortunately, we came to know that Singapore and Malaysia and Hong Kong and all these places also have year ending in March because they are all ex-British territories. And so everyone is going as per March ending and not December ending or some other ending of the year. And as a result of that, Europe has December ending. But unfortunately, our sales in Europe is not too high. So, it all depends upon where is the financial year ending in a certain country and their budget norms and things like that. And based on that, the client are also doing their annual billing.
Thank you, Prateek bhai. All the best.
Thanks.
Thank you. The next question is from Zakir Nasir. Please go ahead.
Prateek bhai, namaskar, Dharmendra bhai. Sir, I have 2 questions. Number 1 is whatever small capex we are doing in this year, what would be the peak viable turnover in maybe 2024 and 2025 because of this? And my question number 2 is, sir, would it be, I mean, after hearing you, would it be fine to assume that these quarterly variances are more due to the accounting policies of our customers and Jash rather than anything else?
See, so let me first address the second question you had, that is about the quarterly variations. Okay. So the countries where 31st March is the year ending, as soon as, really speaking, most of the deliveries which are happening in last week, they reach the site in the first or second week of April, first week of April, say. And so the client is in April more bothered about his billing, getting that material inspected at site, etc., etc. So major portion of April goes away in that for the client. So even if you produce equipment and call him for inspection in April, he is not willing to come. So when we talk about Q1 standalone Jash Engineering, I have got 20 crore worth of finished equipment lying at my plant in Q1, which I could not dispatch because people were not willing to lift it. Now, why they were not willing to lift it? First is because they are bothered with their internal issues related to huge volume of sales which they have done in the month of February or March. So getting bills passed, getting things approved and so on. Second, as soon as April, May is over, from June many places rainfall starts. Now most of our projects are civil oriented. So 50% of the cost of the project is civil works. And these are with big water tanks and water canals and channels, etc. These are all below ground. So as soon as rains start, most of the civil works comes to a stop. Only those works which are above ground are happening. Also, the site becomes quite muddy and not good enough to store materials. So many people who are not ready do not like to take delivery of material. So the first quarter, April, May, June, and the second quarter, July, August, September, to a great extent is affected because of these two reasons. Somewhat in third quarter, October, November, sometimes because of religious reason. When I say religious, Diwali is there, Durga Puja is there, and various other religious festivals are there. Some effect does take place, but not like the first and second quarter.
So I think it will remain like this because of the nature of the industry. It may remain like this. Our accounting processes would remain like this, and it would be safe to look at Jash on a yearly basis rather than track it on a quarterly basis.
Yeah, it would be better to look after third quarter and fourth quarter. Let us not say yearly basis, third quarter and fourth quarter results rather than on first and second quarter results. But my wish is not, as Mr. Sahu said, my wish is not that it should happen like this. That is why we went into the export market. Unfortunately, wherever year ending is 31st March, if we remain strong in those markets, and you should understand everywhere which is 31st March year ending was British. British means English is the language of communication in those markets. And that makes for me easy to penetrate those markets because of language. There I will always have this problem.
Okay, sir. And our peak viable turnover for 24-25, sir, what would be?
We have projected for 22-23 430 crores.
That means, sir, if Pratik bhai projects 430, I think it would be safe to assume it will be 450.
Don't assume. Let us see how it rolls out. So if it is doing good, everyone is happy. But don't put that pressure on me, because sometimes it is not in my hand, it's in my clients.
Sir.
So 430 crore for 22-23 we said, and we expect it to go to 475 to 500 crore in next year, and 550 to 575 year after. If there is no acquisition. If there is an acquisition, then maybe something different.
So March 25, it would be safe to assume it to be 550 crores.
Yeah, between 550 to 600.
Fantastic, sir. Thanks a lot and best wishes, sir. Thank you.
Thank you.
Saki. The next question is from Sanjay Shah. Please go ahead.
Yeah, am I audible?
Yeah.
Yes.
Yeah. Good evening, gentlemen. Sir, you highlighted very well about the company's progress and what we have done in past few years to bring this company to this scale. We have increased our capacity, ramp up that, added new horizons to our sales. We have added new products to our sales kitty. And we have set up a capacity where we can do upward of 500 crore turnover. So Pratik Bhai, now as far as our company, our products and your team is concerned, I think it is very safe to understand the growth trajectory of our company, barring unwanted circumstances. But now Pratik sir, what can you say us about the future? Where from here on, how do you see our company growing? Are we adding any new products, or are we ramping up our existing new products? And do we plan any acquisition, inorganic growth? If yes, then what are that possible horizons?
See, in the beginning, someone asked me where we are not in this water chain. And I said we are not into the water chain related to valves in pipeline. During conveyance of water from pumping station to treatment plant, raw water conveyance, we are not in that business of the control valves. And we are not in the business of control valves for distribution. So these are the two aspects of the business which we are not into. And these two aspects of the business are more like batch production and volume production rather than custom production, which our business is. So this is something which we are lacking. If we go for any acquisition in future, it has to be into this. At the same time, I would like to say that I would not like to acquire any company internationally as of now, because after Rodney Hunt, our energy is sapped. So until Rodney Hunt is doing wonderfully with more than $2 million in profit, I will not like to touch any foreign acquisition anymore. However, we are already pursuing acquisition in India of a significant size company which fits what we are looking for. However, it is a matter of valuation. If the valuation is not right, I will not jump into it. But if the valuation is right, I think addition of that company would bring us in a position which would be unique in the world, because we would be in every aspect of the complete water chain.
So will that be into this valves and distribution valve segment?
Yeah.
That's great. That's great. So we will eagerly wait for your.
But no one knows what happens, because in acquisition we do not know, someone gives a ridiculous price.
Yeah.
So I think we are in the race, but I still don't know.
So what time it may take to finalize?
3 to 4 months.
Okay, fine.
December is their deadline.
That's great. Thank you, Pratik sir. Thank you, Dharamji. Thank you to all.
And you asked one more question about product line, addition of products and things like that.
Right.
Every year we are adding new products. Now, where do we bring these products from? See, India as a market also is evolving. New technologies are being brought into India, sometime by foreign companies, sometime coming due to foreign funding, and sometime because the government wants to genuinely improve the treatment systems in India. So as things open up, new possibilities also open up, and then we bring new technologies to address that market.
Right. Thank you, sir. Good luck to you, sir.
Yeah.
Thank you. The next question is from Mr. Naveen. Please go ahead.
Yeah, thank you for the follow-up, sir. This is regarding a previous participant who asked about lumpiness in our order execution. Just wanted to understand, with our increasing order book size and majority of our orders being executed in third and fourth quarter, how going forward, how are we planning to execute if majority will happen in third and fourth? Are we planning to create an extra buffer? Because it will put a strain on our resources and capacity. There's only so much we can do in third and fourth.
So, Naveen, overall, when we are looking for growth of 15%, you will see, let us see at the end of second quarter, I am quite confident that you will be able to see growth of 15 to 20% in the consolidated as well as standalone revenues. So it's not that first quarter and second quarter would remain the same and all the explosion will happen in third and fourth quarter. I think you will see by the end of second quarter that we have been able to grow 15 to 20% over last year. So when we have grown 15 to 20% over last year by the end of second quarter, to expect the same growth in third and fourth quarter also is possible. Now, why it is possible is that in April we added up significant facilities and capabilities to our company by expansion and addition of machinery. And that makes it possible to address this additional 60-70 crore business which we expect to add this year. So capacity is not a problem. The only problem could be two. As I said before, space to store the material which is finished, because our material is big in size. They have to be handled, they will be kept under crane. And second is financials. You should have the capacity to invest on so much raw material and bought out components that you can do 50% of your turnover in the last quarter. I would say for both the condition, we are quite well placed financially as well as space-wise. But yes, it does put strain on any company if 50% of your revenue is coming in the last quarter. Because you start producing not in the last quarter, you start producing in second quarter, and finally you are billing in the end of third quarter and beginning of fourth quarter.
Yeah, it's because of its increasing train of the closing stock. Every quarter it's going up and balance it in the end of the March.
Understood, sir. Thank you.
It's financial strength in short.
Thank you.
I have one more follow-up. This is regarding disc filters. We are planning to reduce the import content. After this exercise, how much can we bring it down to, and post this exercise, how competitive will be to other competing products?
See, the problem is we have gone for a German collaboration which is very high-end technology in comparison to everyone else. And they also use fancy materials in their design, like everything being of stainless steel instead of cloth and so on. However, the performance is very high, efficiency is very high. Now, I cannot go for years on PowerPoint presentation just saying that I am very efficient, I am very good, etc., etc. We have to show it in the field. So that is why the target is that first 6 machines should be in the field in this year. With those 6 machines operational, we should be able to show to our various clients and then prove that it is not only what we say, but it works also accordingly. This would never become a cheap product. The German machine, the German design will always remain a higher end product offering. So to make it economical, the only way is to reduce the import content. The import content is presently close to 50%. This year we intend to bring it down to 5%. And initially, our collaborator was not ready to allow us to make one of the item, which is the heart of the machine, the filter panels. But we had a discussion with him and now he has agreed. So once he has agreed, we start development activities in October, and hopefully by February, March, that would be developed. Once the filter panel is developed, the import content will come down to less than 5%. Maybe it could be as good as nil. And at that point of time, we would be well placed to push this product aggressively in the Indian market.
So will we, if I understand, we are selling the product at loss. So post this exercise, will we be profitable in that particular product?
Definitely. So just to explain to you, the machine which I buy, suppose if I am buying a machine from Germany, would be around 1.5 to 2 crores. But if the same I produce indigenously, completely, it would be between 50 to 60 lakh rupees.
Got it, sir. Thank you.
So there is a huge difference between the German price and our price, and we can significantly reduce the cost of production so that we can improve our margins there.
Got it, sir. Thank you.
Thank you. The next question is from Sanjay Kumar. Please unmute yourself and go ahead.
Sir, the 300 crores or 400 crores from BMC, is it factored in our 430 crore or 550 crore?
No.
Okay. And when do you expect?
These projects are just awarded. In fact, some of the companies do not have even a team. They are recruiting people. Every company is now recruiting people. Imagine for last 8-9 years, there was no project involved, and suddenly there are 7 projects together. None of the company, bearing say Larsen & Toubro, or even that, L&T will also not be having sufficient resources and team to execute such a project. So they are building teams, they are floating inquiries. These inquiries would lead to nothing. I think the final inquiries will start coming at the end of this year, early next year. Order booking will start taking place first, second quarter of next financial year. And we can talk about deliveries in 1 year down the line, 2 years down the line.
So FY25?
24, 25.
All right. And second, on the control valves, which we spoke about, you said that the market size is almost 1,500 crores.
Yeah.
Which is 2x of our existing market size in India. So the companies operating there might be bigger in scale than us. So will the acquisition size also be significantly large, or how are we thinking about it?
So I can say only that the company which we are looking for acquiring is between 50 crores to 150 crores.
Of turnover?
Yeah.
Okay. And when are we expecting to close this? You said December? Did I get it right?
I do not expect it to close it, because to sell to me or not is not in my hand.
Right.
So the whole process will be over by December, and we have to see who wins it.
Okay. And do we have other options, or we are just narrowed down to this particular company?
See, acquisition is a funny thing. It's not, given a chance, I will not like to do any acquisition this year. I will like Rodnian to be stable. I will like everything to stabilize and maybe go for acquisition in 23-24. But if an opportunity comes, you cannot say I do not plan to do so, I will do only in 23-24. The opportunity has come all of a sudden, so we have to jump into it. When I get the next opportunity, I do not know. If I get the next opportunity in 23-24, I will be more aggressive.
Okay, so and the funding for this will be?
Funding could be loans, could be some equity stake given, as well as raising some fund through right issue or some other way, or strategic investor.
Okay, sir. Thank you.
It's quite fluid. Please understand, we have still not given any offer. We are still evaluating.
Got it. Thank you. Thanks a lot, sir.
Yeah.
Thank you, Sanjay. The follow-up question from Ashish Rampuria. Please go ahead.
Yeah, I think just picking on what one of the participants was asking in terms of variability, right? Now, in terms of the revenue, now with US business increasing, right? Today we are talking about 23 million USD this year and a higher amount next year and so on and so forth. Would we expect this variability to reduce a bit going forward or reduce significantly going forward for that matter?
See, US, our year ending in US also is 31st March.
That is our year ending. I understand. I'm saying from our Q1, which is your April to June, per se, in the US system, that becomes their Q2, right? Because we had the problem that most of our other markets in rest of Asia, etc., were all British colonies, right? So we had a similar problem of everything getting towards the end of Q4. Now, if you're targeting markets like US, which follow that with the Jan to December year as the financial year, then that becomes Q2 for them, right? And if correct. So
but what happens is when you put all your effort into your Q4 revenue, you like sort of empty yourself in the Q1. So you see the US revenue this year has fallen because we have not been able to give them enough deliveries. That is also because of two reasons. Shipment also is one of the reasons, not only production, but shipment also is one of the reasons. So yes, as US turnover increases, our lopsided situation will improve. As Europe, America, and all those countries which are not 31st March oriented increases, this type of lopsided business will reduce.
Got it. Okay. That was my only question. Thank you.
Thank you. We will take a last question from Mr. Naveen. Please go ahead.
Yeah. Thank you. My last question, I just wanted to know the potential market size for grid classifiers and degrading unit, which we are planning to develop. And is it only for India or outside India also we are planning to target?
So any new product or new technology which we bring in collaboration with anyone, in the beginning 2, 3, 4 years is always restricted to India. The reason for that is if we make a mistake abroad to rectify it is very, very costly. So basically all these new products would be restricted to India. Now talking about revenue potential from this project business, I would say these are all being introduced in the Indian market recently, not only by us, by our competitors also. I would say for the market to mature, it will still take 3-4 years. So the new technologies are going into new projects, but slowly it will pick up. And I'm sure that over the next 3-4 years, it will become a mainline product. And when that happens, we are looking at revenue, annual market size for these two items close to 40-50 crore. So if we can address 25, 30, 40% of that market, we are looking at 15 to 25 crore.
Got it, sir. Thank you. Any update on the Singapore order, which one of our competitors had bid and last moment couldn't execute, which you spoke about in the last call?
No, so there were two orders. One was Tata Projects for Kondakulam Nuclear Power Plant. That also they had given to our competitor, and now portion of that order I have already received the LOI. So this 659 odd crores which we have said negotiated for India, 48.9 crore is that. But the Singapore thing is still.
अरे आप हमको घड़ी-घड़ी फोन कर, मैं आ रहा हूँ नीचे भाई, आपको जाने का है क्या?
Singapore, we are still undecided because I am going to Singapore on 16th and I will be meeting the client. So Singapore, still nothing has happened.
Thank you. Thank you. That's all from my end. Thank you, sir.
Thank you. That was the last question. I will request Pratik sir for any closing comments.
I think Excel sir is also joining.
So I'm thankful to everyone for sparing your time and attending this investor conference. I'm sure that as the year progresses in Q2, we will be able to improve upon the last year Q2, and we'll keep on doing this. Things to me look quite satisfactory. The concern related to huge price rise which had happened last year at the end of the year has gone. And so I would request all the investors to have some faith in us and look for improved results in Q2 and Q3. Thank you.
Thank you. Thank you everyone for joining us today. If you have any additional questions, you can reach out to us anytime. We wish you a good health and look forward to seeing you again next quarter. Have a good day. Thank you.
Chat में someone has asked questions.
Most of them are cool.
Anyone has asked question on the chat?
There is one question from Nitin Gandhi. What will be the revenue potential of Unit 2 capex 13 crore?
So on the EBITDA margin going back to 18%, I think we should be somewhere near there this year. Tax rate going ahead, it would be nearly the same.
Whatever it lasts.
That would be 13 crore is not only Unit 2, it is also including some capex in Unit 1 and some capex in Unit 3 and 4. The potential would be after that investment would be at least 20 to 25. Fixed bonding cost is around 1% as of now. When someone else is doing, if the company is doing, it would be less. Sale postponed due to delayed arrival at USA, I would say is close to $1 million. Okay. Next. That's it.
That's it.
Okay. Thank you.
Thank you. Thank you so much. Yeah.
Thank you, sir. Thank you.
Stop recording.
Oh, thank you.
Thank you.